Hi guys, Ben here and welcome to Motivation to Invest. Ark Invest is an investment firm which focuses on disruptive and innovative technology, from gene editing to robotics and 3D printing. Cathie Wood is the founder, CEO and Chief Investment Officer at Ark Invest. She has gained fame recently as her fund outperformed the market. She even caused a lot of controversy by suggesting that Tesla stock would hit $15,000 per share. Tesla is currently the largest holding of Ark Innovation's ETF. Here is an exclusive clip from an interview she had at CNBC.
Wall Street is getting serious about industry disruption, and there are a handful of ETFs focused on just that. Ark Invest products are built to capitalize on disruptive forces like artificial intelligence, perhaps robotics, genomics, next generation internet, you name it, and the woman behind them is here with us today. Cathie Wood is the founder, CEO, and Chief Investment Officer at Ark Invest. She joins us here now at Post 9. Cathie, thank you so much for being here. Take us through the strategies. We mentioned that you tilt towards the disruptive type technologies. What exactly does that mean? How exactly do you hone in on the stocks that go into these actively managed exchange-traded funds?
Sure. Well, our screen is not a benchmark. Our screen is our research. Our starting point is from the top down, and we're looking for learning curves or cost curve declines that are associated with technology, and they're fairly consistent over time, depending on the technology. And from a timing point of view, we want to make sure that we're ready for prime time. So we ask the question, once we figured out the cost decline, okay, for every percentage point decline in price, how much does demand increase? Are we ready for prime time? So in the late 90s, if we had asked that question about most of these technologies, the answer would have been no. And yet investors were chasing them and valuing them on eyeballs and other such things. Today, they are happening. We're ready for prime time. And the fear I see out there when it comes to volatility or disruption or anything that's not in an index is palpable. That's the real opportunity. The dream was too early. Anyone who chased it got burned. Today, they're afraid they should be moving into it.
For better or worse, because there's always two sides to a story, you at Ark Invest have become very closely associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
This means that you are obviously very bullish on Tesla and you do hold it in the funds. Is that correct? And if so, is it just a buy and hold, hope it pans out for the next 20 or 25 years? Or is it something different in the way that you approach this particular holding in Tesla?
It is our largest position, but before I go into that, our conviction has increased in the last year or so. It's our largest position. It's down about 29% this year, and it's always been our largest position this year. And yet our fund is up 28%.
How is that? How does that happen?
Yes.
How does that happen?
It is because last year, when genomics was under assault because of reimbursement concerns and pricing concerns and so forth, we were leaning into those heavily. So you buy low, right? We were leaning into those. And so our second largest position, Invitae, which we think is one of the most important molecular diagnostic companies out there, riding down the cost curve of DNA sequencing, it's up 125%. It got as low as $5 last year. Today it's $18. So leaning into that has really paid off. And it's true with the entire genome sector. We're doing the same this year with Tesla, but our conviction level there is so high that it never left our top position.
How could it be so high? I mean, Tim, this is a stock that is, if you look at a chart of Tesla over the course of the year to date and the 1 year period, this has at best been a roller coaster ride. Sure. At worst been one that's trending lower.
In April 2019, Cathie Wood stated that Tesla stock would go to $4,000 per share. Back then it was just $270 per share, and today it is close to $900 just over 12 months later. So if you would have listened to her back then, you would have tripled your money. So what makes Ark Invest Innovation ETF so special? Well, one of the main reasons is it's actively managed. And as Cathie Wood states, it's traded daily, which is very unlike the majority of ETFs, which are more passively managed and have fixed holdings over a long period of time.
So Tim had earlier mentioned this idea of actively managed ETFs, the ones that don't necessarily track just the S&P or some broader index. Is it fair to characterize Ark Invest as one of those actively managed types ETFs?
Yes. We trade practically every day, so we're very active.
So what does that mean when you trade every day? Because there's this idea that passivity or index tracking is what ETFs are all about. They become synonymous, but that's not necessarily the case.
Right. In 2013, I thought the same. I didn't think ETFs had anything to do with what I do. And we started looking into the wrapper and found there was no reason, as long as we were willing to disclose our holdings at the end of every day, there's no reason we couldn't do an active ETF, active equity ETF.
Next guest thinks Tesla has room to run. In fact, she thinks Tesla could hit $15,000 a share within the next 4 years. Let's bring in Ark Invest CEO and founder Cathie Wood. Cathie, welcome. I know $15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
So you take out your lowest probability scenarios, you take out the ones that you think just aren't going to work, or the highly outlandish ones where everything has to click exactly right. On what bricks is this $7,000 foundation founded? Is it improving margins? Is it lowering the cost of production of the vehicles as they get up to scale, or what?
Yes, there are 3 sources for the increase in our estimate, our estimated price target. One is, as Tesla killers entered the market last year, we expected Tesla's market share to go down from 17% globally, that includes China, to something lower. Instead, it went up to 18%. And the reason it
17% in electric vehicles or in all vehicles?
No, electric vehicles.
Vehicles.
This is global. There are many electric vehicle manufacturers in China. Very low quality, but very. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles. Their battery cost is 3 years ahead, 3 to 4 years ahead of any other auto manufacturer in terms of the cost declines. And so every other auto manufacturer will, if they want to be competitive with Tesla, and I'm including BMW and Daimler and all, if they want to be competitive, like for like, they will have to sell their cars at a loss at the same time they're losing their internal combustion engine business.
Take Tyler's question to the next level.
Yes.
Do you dig in and get granular on the opportunities when you look at the sum of the parts? Is it going to be panels, autonomous drive, or batteries that are the new breakout? Because when we look to Tyler's point, when we look at the cars and production, everyone thinks they're an expert on what they can and can't do with Tesla. But is there going to be shockers going forward where there's going to be a breakout valuation on batteries because their technology is so far advanced?
Yeah, I think they acquired a company called Maxwell Technologies, and they've been very secretive about what that is going to do for their battery technology. So what I just said to you does not even incorporate Maxwell. So yes, we do think there are surprises on the battery front. They have their own AI chip for autonomous, the only auto manufacturer to have one. And James Wang, who worked at, our analyst, who worked at NVIDIA for 8-9 years, took a look at those specs and said 4 years ahead of anything that NVIDIA is going to be able to produce, because it's single purpose, it's not general purpose. So we think they're going to be way ahead of the game on autonomous, and that's where the real surprises are going to be, because autonomous is a recurring revenue, very high margin, almost software as a service like opportunity, autonomous taxi networks. And what you have baked in the cake from the street primarily are low margin gross margins more like auto, in the 25-30% range. We actually think gross margins, because of their battery technology, could head for 40% on the EV itself, and then the incremental revenues from autonomous would be in the 80% plus range. And we think that's what people are missing. And in our $7,000 target, so the scenario testing, we assume only a 25% chance that they're going to be up and running with autonomous within 2 to 3 years.
So quickly, and this is near term, do you expect volatility around earnings? There was in the last couple of years, but like for instance, they sold cars at a 450,000 annualized rate last quarter, right? Mm-hmm. And when you look at their net income, it all came from selling tax credits. Do you expect that to be a big component of it? And does it look like that at other places around the world? We're expecting really a lot of growth to come.
Quick answer,
subsidies?
Please.
Yes.
They're going to get a lot of credits from companies like Fiat Chrysler, who's paying them $500 to offset. So we think that, but that's not in our models. We never include subsidies in our models. What we're talking about right now is Tesla is ready for prime time as an EV and AV manufacturer.
Kudos to you. I mean, you had what I thought was an outlandish target 2 years ago or 1.5 years ago, and here we are. And so you have another one, maybe outlandish, maybe spot on. But let me ask you, when you get to this 7,000, to pick your more moderate case, what's it trading at? As a multiple of earnings, or as a what will that valuation then be?
So in 5 years, again, we don't really operate like that. We're just trying to figure out the cash flows and then discount them. But one of the things that I'd like to focus on is the reason this is going to be such a big upside surprise is because Tesla is riding the convergence of 3 major innovation platforms. Convergence. It's very hard to analyze this in the traditional world, right? Auto analysts are not robotics experts. They are not artificial intelligence experts or battery experts. We have 3 analysts working on this model together. All of them are characterized by exponential growth during the next. We are ready for prime time. The seeds for what we're about to witness now, not just with Tesla, but with genomics, with 3D printing, with everything we do.
Right, guys, so diving into the charts here, we can see if I compare Ark Innovation ETF in red with the Vanguard S&P 500 ETF, we can see that year to date, it's up by 52.92%, whereas the Vanguard S&P 500 is only up by 15%. So it's clear that the Ark Innovation ETF has absolutely smashed it to pieces. Over 5 years, the results are even more incredible. Ark Innovation ETF is up by over 200% compared to just 47% over the past 5 years. Over 10 years, it's up by over 475% compared to the S&P 500's 173.58%. This is truly an ETF which has completely obliterated the market. Comparing Ark Innovation's ETF to Berkshire Hathaway, Warren Buffett's investment firm, it's clear to see that Warren Buffett's firm, which is based solely on value investing, actually didn't outperform the S&P 500 index, and was absolutely smashed by Ark Innovation's ETF. This is even true over a 10-year period.
The seeds were sown during the tech and telecom bubble. The costs back then were way too high to play out, for those platforms to play out. The costs have been coming down for 20 years. We're ready for prime time. These are 3 exponential growth trends that are converging, and that is why this is so difficult for traditional analysts to value. This is all we do. We do nothing but disruptive innovation because we have never seen as much disruptive innovation evolving at the same time ever. You have to go back to telephone, electricity, internal combustion engine.
Diving into the numbers, it's clear to see that Tesla is a very volatile stock, which has seen its share price skyrocket to a record highs, up by nearly 300% over the past 5 years. They have seen fantastic revenue growth by nearly 30% over the past 5 years. However, they have just started to generate positive free cash flow in the last 5 out of 6 quarters, while net income is expected to be positive within the next 5 years. I do have a small position in Tesla, and I would buy more shares in this stock. but I do feel at the moment it has an unjustly high valuation given the current economic situation. However, I will be waiting to buy more shares of Tesla on the dips. It's clear to see that the fund has a high amount of speculative stocks, but also those with large growth potential. Despite many of these stocks currently being unprofitable, it seems ARK Invest tends to focus on stocks with major growth potential. Now, this type of investment seems more risky. However, it only takes ARK Invest portfolio to have a few winners to outperform the index. In my opinion, this is mainly driven by three of my favourites: Tesla, Square and Illumina. In future videos, I'll be diving deeper into these stocks and some of the others in the top 10 holdings. So be sure to hit that subscribe button to be notified. Also, if you found this video informative, please smash that like button. That really helps us out with the YouTube algorithm. And with that being said, I'll see you guys next time.
Coming in, flex, I just wanna win, LABB who we running with, coming in, flex, I just wanna win,